Let's get into the basics and terminology. We're going to build you from the ground up. This is going to be kind of the dull portion of the course, but we got to get through it and learn our terminology to be able to speak intelligibly to each other and really understand these concepts. Where we're going with all this is if you can understand what the market is currently doing or trying to do, if you can understand what the current market condition is, we'll talk more about it. If you can understand a true measure of value, there are some false ones, okay? We'll talk about that. You can then have the basis for expecting certain behavior. Not necessarily predicting, there's a fine line, we'll talk more about that. But you can have expectations for certain behavior. You can then apply the appropriate strategy and tactics. This is what it's all about. So market profile, you kind of already understand this based on what we talked about with the car example. Market profile shows us how much time was spent at each price level, okay? It creates distributions, okay? We can study, here we have a distribution here at the bottom, okay? And you know, we know that people slice this up in terms of statistics and whatnot. You probably all saw this in college. But that middle area right there, 34 and 34, 68%, that's one standard deviation of a normal distribution, okay? And that's going to become something that's important to us. That's going to be a proxy how we define what we call value around a distribution, okay? That's going to become very important for us. If anyone has any questions, if I don't make sense with anything at any time, just interrupt me, okay? All right, how's a profile constructed? It's pretty simple. I hope this comes through for you. This is a 30-minute bar chart. You've all seen one of these, okay? We can label each of these letters, okay? Market profile terminology calls each one of these a TPO period. Not very important. We're not going to get bogged down in these little details. Time, price, opportunity, okay? We have A period, B period, C period. In this case, each of them representing a 30-minute period. Here's what that looks like as a profile chart. Let's go back to it, visually see it. We have it kind of drifting higher, a sell-off, a little higher with a head fake and J period higher, and then a sell-off there. Here it is, A period, B period, C period. Here's that J period spike high. It's the same thing, okay? 30-minute periods. To show you how this unfolds, well, let me say this. It does not repeat within the same period. So if we open right here, which is the open, by the way, at this little blue A, that's where the session opened in the morning, and we trade down to this low of day, and then it forms those little A's every tick or whatever you have your settings set to as it goes lower, okay? It doesn't stack more A's or anything as it trades back through those A's again, okay? And just to kind of hammer that home, here is a quick video of a profile developing throughout the day. This is played at 240 times normal speed, and this was just this morning. We're going to use this example again later. So you see, as we travel back and forth across 33, 32, 31, 32, again and again, it's not printing more A's, it's just, okay, during this half-hour period of the A period, this is the range that we've traveled. Boom, B period begins as a 30-minute period begins, okay? After 30 minutes, we'll start forming a C.
Now, can you do this on an hourly chart or
anything you want?
Okay.
Yeah.
So 30 minutes is just like
This
the chart
is
they chose.
standard.
Okay.
Yes, very standard. Now, take a look at this. We have A, B, C, D. This is not typically how it's used. This is split out into each of those periods. Imagine the game of Tetris, okay? And instead of everything falling down, everything falls to the left. So notice how there's nothing else except for those couple C's up here. They're going to go all the way to the left with the A's, right? This M is not going to be able to fall very far because look, it's going to run into KJ, blah, 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 right? So here's how it looks usually. Boom. Everything just falls left and it becomes a distribution. We can see where we only traded 1 half-hour period. We can see where we traded 2 half-hour periods. It shows us time spent at price. Okay? The blue dot shows us where we open for the full session, and the arrow on my charts, that little gray arrow, shows where we closed for the session, just FYI. There's different notations and different software will do different things, and actually I can tell my software to make a different kind of marker for the close or whatever I want, but for all my examples, this is what it'll look like. And notice how I've gone back and forth between using letters and then just blocks sometimes. Doesn't matter, just different ways to visualize it. All right, we're going to go through some vocabulary here. I encourage you as I go through each of these terms to think about that car auction and think about auction market theory. Always try and like bring all that together, okay? The point of control, the POC, okay? The POC. If you're using a volume profile, it's volume point of control, VPOC, okay? It is the most traded price. It is where we've spent the most time. It's where we've, you can see it, and it's highlighted all in red here. And I have my settings to extend that red line right there to just continue to show me and highlight that. Okay? It's typically in a big area of established value or balance, right? That's typically where you're going to have spent the most time. The value area, remember that 68% one standard deviation? I guess we were lazy when we developed Market Profile back in the day. We just said, let's call it 70, okay? So in my software, I could change it to 68. It doesn't matter. That 2% really doesn't make much of a difference. So 70%, you can see my software puts out these gray lines. I ask it to do that. I could turn that on or off. But I want to know where that value area is. Single prints. That was that C period high from our example where there was only one TPO period that had traded there, okay? And what do single prints represent? Excess, another very important term. Excess. When we were trading Honda Accords and we went up and all of a sudden the buyers got exhausted and the sellers slammed us back down into value, we didn't spend much time up there, right? We just went up there and whoosh. That was creating excess. It signifies a rejection from an area, okay? If we are swiftly rejected from an area, we're not going to be able to spend much time just consolidating there. So we're going to leave this behind, and that's our clue as to that rejection, okay? Think of it like a wick if you're used to, trading a price action type of thing. It can take the form of not only single prints, but gaps. Gaps are forms of excess, okay? Balance. Okay? Balance is anywhere where we're spending a lot of time at prices. Okay? We're consolidating. We're building value. It's a balance area. I just generally highlighted the balance of that day's profile. It's not necessarily the exact value area, but that's a general balance. Okay? You'll get more and more comfortable with these as we go. It could be for a single day. Other words that we can use to define balance or call out balance. We could say it's rotational, it's consolidating, it's range bound. They all mean the same thing. We can see this over multi-days, not just one day. And notice I just switched to bar charts here because I just want to continue to hammer home the concept, not necessarily market profile, although we'll see that market profile gives us more than this. But look, you guys can see this. Here's 4 days where we didn't really go anywhere. There was a balance. Then we had a trend up, then a couple days of balance, then a trend, and then balance. Remember, balance to imbalance to balance to imbalance. This is the cycle. This is what markets do. Okay? Imbalance, I've highlighted the opposite. We balance and then we have a trend move, a directional move. Auction market theory or profile people, we call this imbalance.